Hello, everyone, and welcome back to Swan Signal Live. This is episode 51. We're here today with Luke Gromen. He is the CEO of Forest for the Trees. And we're going to get into this one after a little bit of shilling from Swan. I want to let you guys know what we're up to here at Swan. Got some exciting things to talk about. We have just recently launched Swan Private. This is to meet the demand that we saw coming in after Michael Saylor really kicked this trend off of corporations putting Bitcoin on their balance sheets last August, and then just really doubling down with his corporate debt offerings to buy more Bitcoin. It's just been amazing to watch him operate in this space and just really aggressively go after Bitcoin with incredible conviction. In response, we've seen a lot of high net worth individuals, trusts, and corporations coming to Swan asking if we can help onboard them and help them start accumulating Bitcoin. Of course, we can, and we have been doing that for quite some time. So we decided to formalize a division called Swan Private. We just launched a couple of weeks ago. You can find it at swanbitcoin.com/private. We can help you if you're looking to acquire at least $100,000 worth of Bitcoin over the next 12 months. But we can also help very, very large companies with up to $100 million buys with no annual limits. So check out Swan Private at swanbitcoin.com/private. And of course, we are also offering and continue to offer our core service, which is automatic recurring buys, the easiest in the industry, the cheapest in the industry, with 0.99% fees, 60 to 80% lower than Coinbase for the same service, and about 50% lower than Cash App for automatic recurring buys. Of course, we also offer instant buys, our smash buy, so you can buy on the dip, which Swans have been doing in earnest during this particular dip and the previous dip. We're scrambling to meet demand on these dips, which is awesome. It's great to see strong hands, convicted hodlers working with us as Swan members and buying up these dips, which is exactly what should be going on, especially here in a bull market. So we're happy to see that. We also like to start thinking about, these automatic recurring buys, this narrative of pay yourself in Bitcoin or pay me in Bitcoin that we've been hearing from Russell Okung, NFL player, that he's taken half of his salary in Bitcoin this year, which is awesome. And you should do the same thing. Any automatic recurring buy service can do this for you. You should, retain fiat to pay your bills. You don't incur tax burdens, in terms of getting your entire paycheck in Bitcoin. That obviously has tax implications. So pay off your fiat denominated bills and debts, and then whatever you have left, just stack it into Bitcoin. So you can set that amount into your plan by daily, weekly, or monthly, and we'll automatically pull that fiat from your bank account and turn it into Bitcoin for you. And another thing that we're also known for is automatic withdrawals. I think we are the only business in the industry to offer this service. And we do it in a way that's really the Bitcoin best practice way. So you can add an address, and we'll automatically send you an email to confirm the withdrawal. And you can even use an XPub, which is basically a way for us to generate like 500 addresses, and we'll rotate a fresh address with every withdrawal. So that is a good practice for privacy reasons. And we do have a team full of Bitcoiners who are dedicated to doing this the best way possible, the most Bitcoin way possible. And that includes a dedication to Bitcoin education, including this show, Swan Signal Live. So let's dive into it with Luke Gromen. Luke, welcome to the show, man. You are CEO of Forest for the Trees. You're a macro analyst. We've heard a lot of Bitcoiners will have heard from you quite a bit on Preston Pish's show with Lynn Alden and other macro Bitcoin friendly macro analysts such as yourself. Why don't you just give us a quick introduction of you and your business and why you care about Bitcoin?
Absolutely. So thanks for having me on. Forest for the Trees, or FFTT, is a macroeconomic thematic investment research firm I founded 7 years ago. Had spent nearly 20 years on the in finance, primarily on the sell side in investment research and investment research sales. I had been one of the editors of a research product that connected dots for investors and for clients of the firm. at both firms, at Midwest Research and then Cleveland Research Company after that. Struck out on my own in 2014. And what we do at FFTT is aggregate a large amount of publicly available macro and thematic data points trying to identify developing economic bottlenecks where excess returns will accrue to companies or sectors or asset classes set to participate in those economic or benefit from those economic bottlenecks. And so one of the biggest economic bottlenecks we've been describing for a number of years has been effectively what is the first bursting global sovereign debt bubble in 100 years. And so when you go back to the year 2000, we had a tech bubble. It burst. It was kicked upstairs to the banking system via a housing bubble. In 2008, that burst. It was kicked upstairs to the sovereign by virtue of sovereigns bailing out banks and pretty much the entire system. And now we've got a sovereign debt bubble. And the challenge is that when you have a sovereign debt bubble, sovereigns can't default. They can always print the money to fulfill their obligations. And so if you have a sovereign debt bubble, what you really have is a fiat currency bubble. And so it's a big dynamic of what we've been talking about. And it ties back to Bitcoin when you describe it like that in a pretty obvious way. And so it's been one of these things where we really come at Bitcoin from the perspective of a macroeconomic standpoint and as an analyst rather than as a technologist. So it's a bit of a different angle, but I think it's helpful when you marry both of those, both the macro view and the technologist view together.
Yeah, absolutely. And we do that a lot on this show. We do have a lot of macro analysts on the show to try to give Bitcoiners more of a holistic view of in context of where we find ourselves and how Bitcoin fits into this global economy. It's awesome to see Bitcoiners really coming up to speed and learning a lot about not just what money really is, which is a question that Bitcoin forces upon us when you find Bitcoin and dive down that rabbit hole. The initial question that really sort of puts you into all the different side tunnels of the rabbit hole is, what is money? And we're all often surprised, or many of us surprised, who don't have sort of that gold bug or libertarian background or Austrian economic background, to find out that what we are using or calling money now is a complete aberration of history. So when did you, what did you study in college, and like at what point in your life did you sort of have that moment where you were like, oh, this is what money really is, and what we're living with now is not that, it's something different?
So in college, I was actually went to school to be an architect, and the University of Cincinnati has one of the best architecture programs in the country. I got in and got about a quarter and a half into my education and realized I didn't want to be an architect for the rest of my life for any number of reasons. So fortunately, I had also chosen Cincinnati because they had a great engineering program, great business school, and so I transferred, studied finance and accounting. And loved it. Worked, like I said, joined into the sell side research business fairly early in my career. Worked my way up. In terms of when, what was really an epiphany moment, I guess, in terms of the money system for me, it was really in 2008 when the system, really maybe 2007, and then into 2008. It was apparent to me, when I mentioned before, we were doing investment research, we were real pioneers in doing bottoms up fundamental channel checks. So we, as a firm, were talking to private distributors, suppliers, et cetera, of publicly traded companies. And you can build up a mosaic of what's going on in, not just at these companies, but then I had a real knack for connecting these dots and figuring out what's going on in the real economy. From a macro perspective. So fall of 2007, I actually went to 100% cash in my own portfolios because based on some of the things I was hearing, it was apparent to me that there was a high likelihood that the system was going to collapse. Banking system, economic system, et cetera. And so I kind of went through that whole process in a pretty good position because I was not losing any money. I was sitting in cash, watching assets go down. I had access to some of the best information in the world, so I could see it happening real time. But when the real epiphany for me happened, I think it was in late '08 or early '09, when, in particular, when the Fed did what I call the first big QE, where they created $1 trillion and they bought $1 trillion in treasuries, which was effectively helping to finance the U.S. government with printed money. And so for me, it was just this recognition that in a world where there are finite resources, finite time, finite energy, and then to have a money system based on one actor openly printing money to finance itself, to me seemed like just a violation of the rules, and it's in some basic level. And that's when I really started getting more at the time into gold, and that was really, I think, sort of a big awakening down the path for me, I guess, if you will.
So then you must have been, I mean, predisposed to understand the Bitcoin value proposition when it came to your attention. What was that moment like? When did you discover Bitcoin, and was it something that you were immediately like, oh, this makes sense. This is something that's an alternative to gold, and it's, for the digital age, and maybe this is something substantial here and not just magic internet money.
Yeah, for me, it made sense right away the first time I heard about it.
Yeah.
From the standpoint, and the reason I say that is, my approach on gold was really coming from an angle of peak cheap oil. So you could see very clearly in the energy statistics and the energy field production. I had read the book in 2002, I think it was Matt Simmons' Twilight in the Desert, and you could see where there's this peak cheap oil angle, where the world was finding less and less oil, and the oil it was finding was more and more expensive, and we had just seen oil go to $150. And so to me, it made no sense for an energy exporter to produce energy that was increasingly expensive and sell it for dollars that would be then turned around into debt that was yielding zero effectively by that point in time, and debt that was being created at amounts, at exponentially growing amounts, while production of energy was stagnating. And so that angle, it did, and for money that was being printed to help finance those treasuries. So to me, I came at gold from a perspective that it just seemed clear to me that I wanted to own gold, because you can't have a global economy based on energy and that energy being sold for this printed money at 0%. That didn't make sense to me. And I just figured that we would start to see a transition over time to some sort of more finite neutral asset that reflected the reality of peak cheap oil, some sort of asset that could float in price, that like gold could, once rates hit zero. And so when I give that all as background, by way of background, as it relates to Bitcoin, because when I first heard of Bitcoin, I want to say it was probably, I don't know, 2011, maybe 2012, who knows? It was Zero Hedge started writing about it. I give credit because I remember reading something that Raoul Pal had written about it. I want to say in his Global Macro Investor in 2012, maybe 2013, something like that. The energy connection within Bitcoin, it clicked immediately for me in terms of, I get it. So it's basically my whole objection in my own mind, the reason I bought gold, being that it makes no sense. If I was an energy exporter, I would not sell my finite energy, my more expensive energy, for money that's getting cheaper and cheaper to produce. That doesn't make sense to me, and I would start to swap that for gold. That's what I would have done had I been an energy producer. So when you look at the Bitcoin side of it, Bitcoin was basically solving for that through except with electricity instead of with oil. And so I got it right away from that angle. And I wish that had been the end of the story. I wish I would have, bought a whole heck of a lot more than I did. I didn't know how to buy it. I didn't know where to buy it. First time I bought it was probably, I don't know, I know I bought it on Coinbase in the first half of 2013. So without the price chart in front of me, I mean, I think I bought it from, call it $500 up to 1,300 or 1,200 or something like that. And owned enough to make a difference. And then at the end of 2013, I left my firm and started FFTT, and I needed startup capital. So
Right.
I had, I didn't understand it well enough at that point because I had different buckets of capital. I could say, well, I could sell some of the gold. I didn't sell any of the gold. I could sell. I had a farm. I had a 100-acre farm for investment purposes. I sold that and for startup capital, and then I sold about 90% of my Bitcoin,
Okay.
regrettably.
Right.
So I said the first time I bought, and I basically owned it straight through 2013 to present. I've always owned it, but it's only been in the last probably, I don't know, 6 months, I would say, that it's really, I think, and I think it's coincided with a lot of people. I got the energy value proposal, if you will, right away. What I didn't understand was the technology side. I didn't understand the elegance of the technology side. You start seeing all these other coins go out. I never invested the time to look at the difference between it and others. And so I just, quite frankly, I never had the confidence, the information background to have the confidence really to um, to be bigger than I was. So it was always, a 2% position, a 1% position, a 3%. It was never more than that. So I mean, it was fine. And now it's a bit bigger than that. But that was, to me, it was, as I look back, and it's funny, which I'm sure everybody has that kind of feeling about it. Oh, I missed it, right? I got it right away, the energy side, but I didn't get the technology side. And that to me was why it was never bigger than it was up until more recently.
Yeah. So by the energy side, you mean just that money, in order to maintain its value over time, it needs to be hard to produce, right? So either oil-based or gold-backed money, there needs to be some kind of energy input on this side of the equation, so that the other side of the equation can kind of balance out in terms of the value, purchasing power, I guess, on the other side of the equation.
Yeah, effectively. I mean, if you look, I just look at it as my life is finite. I wish it wasn't, but
Yeah.
it is. I've got finite amount of time. I've got a finite amount of work and effort I can put in, and that is my work. My time is energy expended, and oil
Okay.
is just energy expended. Electricity is just energy expended, and to the extent that once you read enough of the history books, when governments get over indebted,
Yeah.
they always do the same thing. They get their way out of it by basically stealing your time back from you, except my time's finite. So ultimately, I want a money that has an energy component, basically a peg to energy. Um, and the way we've written about it a lot was, historically people say, well, we can't go back to a gold standard. I said, I agree. What I've always said, the fix to the system was you would peg gold to oil at a fixed rate. So instead of pegging gold to dollars, that doesn't work. We did that for a long time. And then from 71 up until about 2003, maybe not 71, but from about 73 to 03, so nearly 30 years, we effectively pegged dollars to oil in a range. If you look, the price of oil went from $15 to $30 for 30 years. It never really traded outside of that range. And when it went above $30, the Fed was tightening. And when it went below $15, the Fed was loosening. So the Fed was effectively managing Fed funds to keep oil in a range in dollar terms for that 30-year period of time. You could see it clear as day on charts if you look at it. So we went from pegging dollars to gold to pegging oil to gold, or dollars to gold, to pegging dollars to oil. And the gold system broke. And then in 04, 05, the oil pegged range, the oil range peg of to dollars broke. And we've been sort of free floating ever since. And to me, the solution was always peg gold to oil. So if you come out and just
Interesting.
say,
Yeah.
oil is, gold is 1,000 barrels of oil, and that's any oil transactions have to settle in gold at 1,000 barrels per ounce. then every country, every person can decide. So if the United States says, hey, we've got a whole bunch of shale, it's $60, then and we can be energy independent, hey, great, then gold's $60,000 for you. Now, if you are the Saudis or you're the Russians, hey, we've got nothing but oil. We don't need it. We can, we'll have it, $2. All right, so gold is $2,000 in Russia and it's 60,000 in America. Well, that implies a collapse in the dollar against the ruble. But the point is particularly as this is a Bitcoin show, the point is that it's the same dynamic. You're basically you're pegging the outcome to the energy, right? It's a gold. Bitcoin is effectively pegging gold to oil at a floating rate, right? Or at a fixed rate, whatever the cost of electricity is, then you can decide what you want to do, but you're taking out that risk of your time, of the authorities stealing your time that I referred to earlier. And so that's how I've always kind of approached it. And I think my thought process on the gold oil stuff made it really easy for me to understand the value proposition as it relates to Bitcoin with the tie to energy. Like my black hole on the whole thing, regrettably, was the technologist side. I just, I didn't have the background to really understand the elegance of it and how it would outcompete other coins.
Yeah, so I mean, it's like it takes a force of nature, right? That something outside of man's control. So either the amount of gold that we can extract from the earth every year or so, same thing with oil and the energy that is required to extract both of those things from the earth, is sort of a constant, or at least not something that humans can change. And so it takes the power out of the hands of a centralized authority, and currently right now the Federal Reserve Bank of the United States. And that's Bitcoin is the same thing, right? We're using energy to create money, and it's an energy intensive process. When you were talking about how you didn't really approach it with the technical understanding, but I assume you have like a basic understanding of like the difficulty adjustment, which is really interesting. Which gold and oil can't have, obviously. There's more of an incentive to mine gold or to extract oil from the ground if the price goes up. But the difficulty of the mining doesn't necessarily change in accordance with that incentive. So what do you think about the difficulty adjustment? Every 2 weeks we adjust based on trying to target that 10-minute block time. Is that an improvement on energy-based money, do you think, or not?
I think it's ultimately depends on what you want to solve for. I think if you want to solve for the hardness of the money, absolutely, I think it is. If you want to solve for flexibility relative to human population growth or other externalities, then there are those that would argue gold is still superior. Ultimately, I think it's easier to just solve for hardness of money. And if that's the case, then yeah, I think that is an improvement on it. Historically, gold had, before the technology side of it, gold had its own difficulty adjustment, right? It's 100 years ago, they were picking up chunks of gold, huge chunks of gold off the ground, and maybe 150 years ago in California and in Colorado, and now you got to go 2-3 miles down for it. And so there's this natural difficulty adjustment that's always existed with it. The other thing that was always true of it was that its supply grew at, call it 1 to 2% over time, CAGR, long term, and up until 1850, from the time of Christ until 1850, human population grew roughly 1% CAGR. So those two things pretty much moved along together. And so what happened in 1850 was, with the advent of fossil fuels really expanding, a massive, unseen in history up to that point, productivity boom, human population responded. So human population, after growing 1% CAGR for nearly 1900 years, proceeded over the next 150 years to grow 6% CAGR. And so I think in no small part, a lot of what the craziness we've seen in terms of human interactions since 1850 have been trying, as it relates in particular to economics and geopolitics, has been around trying to marry this old, the gold standard where supplies are growing one, and the human population, which is growing six, and which productivity is rising rapidly.
Mm-hmm.
You get this deep fundamental mismatch if you don't let the price of gold float in fiat terms. And the whole time, when you peg gold to fiat, and then your population grows 6%, your productivity goes up a bunch, it's very deflationary. It creates a whole bunch of problems. If they would have just let the price of gold float in fiat terms, it'd been fine all along. When, again, to float in fiat terms, you basically have to peg the gold to the energy. Just basically say, hey, it's not $35, it's not $35 an ounce. It's, it's 20 or 100 barrels, per ounce, and adjust that as the supplies of energy go up.
Right.
Bitcoin sort of does all that on its own. And so that was my sort of base of understanding when I first saw Bitcoin. And so when that's why I say when I saw it from the energy side, I go, oh my gosh, that totally makes sense. Like, that's that's sort of how I've thought about it.
Yeah. It's a really interesting perspective and way to approach or like think about Bitcoin that I hadn't really seen before. And I see a few comments in there that to the same extent that it's framing it from the, comparing it to gold and oil. And I hadn't thought about the idea of pegging gold to oil as a potential solution and letting the fiat float against it. That's fascinating to me. And having an invention that sort of makes that solution happen elegantly and is also, digital and has all of the advantages of being able to transport, for virtually free or very little cost relatively to transporting a physical goods around the world, very short amount of time. So we've seen this idea that Bitcoin is a long-term store of value for all those reasons, right? It's short-term volatility is there in US dollar terms, and that's going to be there for a while. Michael Saylor was on CNBC this morning, and his segment closed out with him basically saying, like, look, Bitcoin's $1 trillion asset right now. The next stop is gold. It's going to eat up gold's market cap because it's, a million times better than gold is what he usually says. And then it's going to eat up like debt-based monetary premiums. And that's going to be, it's going to go to slowly to 100 trillion. But once it gets to be a $10 trillion asset, the volatility will largely decrease. And then it'll be kind of a steady march up as monetary premiums come out and realize, hey, this is a better place to put this store of value. This is not really a store of value asset. It's really should be, we should be evaluating a company based on its fundamentals and not speculating that it'll be able to hold the value of my money better than cash or bonds or whatever. And so the volatility will decrease slowly over time. Do you see Bitcoin growing in this way, becoming a global store of value to such an extent? Or do you see the traditional sort of other roads of investments, other relatively scarce assets like stocks and bonds and real estate maintaining that store of value, some store of value premiums? Do you see it growing that big?
I think it on some level depends what policymakers do. And I think if they don't change anything, if they leave rates at zero and they amp up the fiscal, and we once you get to a sovereign debt bubble the way we are, as we talked about earlier, there's a great chart from the IMF that we've used in our research for clients that shows you go back 150 years when sovereign debt levels as a percent of GDP get as high as they are now in the developed world. There's only three ways out of it. You either default, you have high inflation or financial repression, where basically they hold rates down and let inflation rise, or you hyperinflate. That's it.
Right.
Those are the only three ways out. And what's interesting about this chart in particular is it breaks it down to developed markets and emerging markets. And so the emerging markets saw this in the 80s. They saw this in the 90s. It's been a long, long time since we saw it in developed markets. And so where I'm going with this, I guess, is two ways. If nothing changes, if they just kind of keep trying to get out of this the way sovereigns have, then I think, yeah, to me, I think Bitcoin is going to surpass, would Bitcoin surpass gold's market cap in that case? I do think it would. Do I think that I continue to think, with all respect due respect to Michael Saylor, I think I would much rather hold gold, the 12 trillion in gold, than the 128 trillion in the bond market that's in the global bond markets. Like that to me is the real, because look, it is in a number of ways Bitcoin better than gold? Absolutely. I think there's a couple ways in which gold still does better. We can talk about those later. Those could change. But the biggest is gold's face value can rise. Gold can go to $1 million. There's no reason it can't. The Fed could make it go to $1 million tomorrow. They could come out tomorrow and say, we now value gold at $1 million, and here's $1 million fiat, and it's on our balance sheet. Oh, by the way, the U.S. is completely out of its debt crisis. The dollar's got hammered. Bitcoin's going to go to the moon too, make no mistake. But they can't do that with bonds, right? So to me, I think the real, when you talk about if the status quo continues, the real interesting thing is not Bitcoin eating gold, it's Bitcoin eating the bond market. Now, the challenge is that's the bond market. That's a national security imperative, particularly when it comes to sovereign debt, the treasury market.
Yeah.
So there's a couple things. If you're a policymaker, you either let this thing happen. Bitcoin is really a wrinkle in the matrix. It is.
Yeah.
I've equated it to the existence of Bitcoin is like the fiat system is the Titanic. The global monetary system is a Titanic. And the fiat system, if you've seen the movie, the James Cameron movie, where they detail how, in the computer model, how the iceberg made little dots along the hull right at the front, and that was it. And that was enough. Bitcoin's just like the little dots in the hull of the Titanic. It's letting water in, and there's these airtight water tanks, and hey, we're fine, we're not going to sink. But they never cap the airtight water tanks, so they're going to go over one, and then the ship's going to go down a little more, over another, and pretty soon it's the ass of the ship's going to be up in the air, and Rose is going to be hanging off the back, and Leonardo DiCaprio is going to freeze and die. It's going to be a tragedy. So the Bitcoin is ultimately creating leakage here, and by leakage I mean I, as an investor, am moving capital into Bitcoin. Your clients are moving capital into Bitcoin. Michael Saylor is effectively, by his actions, encouraging corporate America to defund the United States government and put their money in Bitcoin instead of into treasuries, instead of into the banking system.
Yep.
And that's fine. The question then is what's the response, right? Because those are the dots in the hull. The way that goes, the flooding that leaves the SS, U.S. Treasury market with its rear in the air and Leonardo DiCaprio freezing to death is either rates rise to reattract capital back to the Treasury market, which breaks the economy because the U.S. government can't afford those, the housing market can't afford those, debt levels can't afford those, or the Fed buys them with printed money. Which accelerates this whole process, just like we saw with where the faster the Titanic sank, the faster the Titanic sank. And that's what we're talking about here. So if the Bitcoin is really like I said, the hull the hole in the hull of the Titanic in the movie. So how is the reaction? Do policymakers just let that happen? And I've said I think there's a real case that there is some quorum of policymakers that know this needs to happen. It's going to happen. It's now in our interest because, quite frankly, from a geopolitical perspective, China is using the existing dollar system against us to our disadvantage.
Yes.
And
we should dive into that in a little bit more detail as well.
Absolutely. Yeah. So I think there's an element of policymakers to say, hey, why not let it happen? We're going to end up ahead for any number of reasons. It's But what Bitcoin will do, Bitcoin will effectively hyperinflate the U.S. financial system. And that sounds hyperbolic, except if you look at the price of Bitcoin from October to today, the dollar has hyperinflated for 5 months against Bitcoin, using the IMF definition, which is 50% per month. So we've seen a little glimpse of it, but that's where that would all potentially go if Bitcoin is just left to its own devices. The flip side is if policymakers decide they don't want the treasury market or they decide this gets too far, they can't shut down the technology. They can, in theory, close off the on and on ramps. But now you're talking about the United States implementing capital controls effectively in a $1 trillion plus asset. Presumably, it would be higher than. If they don't have cooperation from abroad, that's a problem. They're in a competition with China, so it's very possible they won't have cooperation. So that to me is a little bit of the other side of like you just don't know what the policymaker side is going to be. But broadly speaking, I think a lot of what I agree with a lot of what Michael says. To me, I think the real bogey is not gold. The real bogey is the debt market.
Yeah. Yeah. And there's a Bitcoiner named Pierre Rochard. He's been around for quite some time, and he co-founded the Nakamoto Institute, which is based down in Austin, Texas, and really has a kind of an education mandate. Wrote a piece called about a speculative attack on the US dollar. And what Michael Saylor's doing, like you're alluding to there, is effectively that. It's taking out debt in the bad money and buying the good money and accelerating the process of the death of the bad money and the adoption of the good money. This could, I mean, like you said, this could definitely be seen as an attack on the government and the fiat standard or the US dollar standard, global reserve currency status that, confers a lot of power onto the US government. You can argue that it's, responsible for much of the US government, access, right, to money or to debt to be able to fund its military and social service programs, et cetera. And I definitely run into quite a few people who, are concerned about that. Like, what does that do to this nation, right? And you brought up China and how China is using the dollar system against us. So it sounds like you think that maybe being friendly or having a dovish approach toward Bitcoin on the U.S. Government's side of things might be a good idea, despite this, appearance that a speculative attack on the dollar would be bad for America. So can you tease that out for us? There's a lot of complex sort of macroeconomic and sociopolitical considerations there, but I wonder what your thoughts are.
Yeah, so to be clear, I don't know anything on this front. So I'm just watching what I'm seeing, and every day that goes by that Michael Saylor does not get audited by the IRS in a big way makes me think that there is at least an element of Washington that has tacit approval of what he's doing. Every day that goes by that he doesn't get a knock on the door, he's 25 minutes from Washington, D.C. He's probably 15 minutes from the CIA. There's no knock on the door. He just keeps on going and going. The more that happens, the more I have no proof. I don't know anything. I'm just watching. I know the system as it was structured. I know how sensitive the U.S. government has been about dollar hegemony for a long time. I know they're not dumb. I know they understand what this is. The longer they go without a response, the more I think there's an element where they are tacitly approving or they're looking the other way. Now, why would they look the other way? I think when you take an objective look at the dollar system as it is structured now, we can see what China has done over the last 20 years. It is, people say, well, we're still winning, or you can't debate. Over the last 20 years, China has won. They owned 60 billion in treasuries in 01. They own still $1.3 trillion, and they haven't bought any in 7 years. Their relative growth rates, their cities, their infrastructure, their relative military strength to ours, all of these things have massively closed the gap. If you look at the Eurodollar system and what China is doing, again, objectively, China is borrowing dollars. They are then lending those dollars at a spread along the Belt and Road that is increasing their influence across Eurasia, geopolitically and economically. They are often lending those dollars against hard asset collateral. And so China is gaining increasing control of the finite assets, finite reserves, finite commodities that we were talking about earlier. And remember, the overriding fundamental mismatch that got me interested in Bitcoin and in gold in the first place, and that it was the aha moment for me with Bitcoin, was you can't have this currency system where they're creating unlimited amounts of currency at a time when you were sort of peak cheap commodities on the other side. And so what China has been doing has been basically leveraging this trade. They borrow the dollars and they're buying up the commodities and the hard assets. And then when their borrowers, these other emerging markets, run into dollar shortages, the Fed comes in with swap lines, hands the other emerging markets dollars, those emerging markets then hand those dollars back to China. So basically, through the existing euro-dollar system, the Fed is backstopping, allowing, supplementing, subsidizing China, buying up these finite assets, increasing China's power, increasing China's energy security, increasing China's geopolitical power, economic status, funding China's military, all of these things through the euro-dollar system. And the cherry on top of the entire ridiculous sundae is the U.S. military protects the trade lanes for China to bring all this stuff back.
Right.
We can't. People say, "Well, we can attack the trade lanes." No, we can't. I mean, we could, but that attack is the end of the dollar system right there. That's it. That's game over. So that they can't. So I know that is understood in certain circles in Washington. That I do know. And so if I know that, then you say, okay, what else is China doing to subvert the dollar system? Well, China and Russia and others are buying gold, right? Like, that makes sense. Like I said before, if you are in this finite energy, finite peak cheap commodity regime, it makes no sense to store your surpluses in dollars with rates at zero or near zero. I mean, U.S. Treasury issuance since 2008 has grown 9% CAGR. The rate hasn't been above 3 on the 30-year, barely, right? So you can't afford to store your finite surpluses in debt that is never yielding above 3 when the supply of that debt's growing 9 CAGR. Doesn't make any sense. You're better off holding gold, which has grown CAGR, what? Oh, 9% since 1971, right? So they're using gold. Now, so what do I do as America? Well, I either start reserving gold, but again, the day the Fed comes out and says we're buying gold, or the Treasury comes out and says we're buying gold, that's the end of the system as it's structured. And that's, for reasons I've talked about before, probably a good thing. But the other thing you could do, if I was working for the US government and they said, Luke, what would you do to combat this? It's simple. I'd let Bitcoin run. I would have a harder currency than gold, and I'd let it run. I would let it be, and I would just stand aside, benevolent, or benevolent neglect, and I would let Bitcoin run, and I would make sure some of it was on my balance sheet somewhere, and that's a piece. I've seen people say, well, we have some from what we've confiscated from the Silk Road. Maybe, I don't know. But I would. The way you win is you say, okay, fine. Russia, China, you want gold on your balance sheet? Great. We're gonna have the American settlement system. We're gonna have the American economy, and we're gonna have rule of law. We're gonna have all the stuff that sort of got America to where it was. And we're gonna use Bitcoin to settle. We're gonna use the hardest asset, and it's gonna float in dollars. It's gonna float in everything. It's gonna be completely transparent. It's going to be harder than gold. We all have seen, everyone on this show, I'm sure, has seen what Bitcoin has done in gold terms, right? It's gone up and up and up over time. I'm like, you know what? You guys want to own gold? Great. You do gold, we'll do Bitcoin, and in 10 years, we'll buy back all your gold from you.
Amazing. So how would the US dollar trade against Bitcoin? Like, if you let it float, what determines the US dollar's purchasing power, or conversion rate between gold, or between Bitcoin and dollar? I mean, is that essentially what we're doing now, but you just let it run?
I think we might be. I don't know, but you would expect the dollar to hyperinflate against Bitcoin, and it started in October, and we'll see. Now, hyperinflations, if you look at I've written about this a number of times to FFTT clients, what Bitcoin is doing in dollars and in all fiat by extension is no different than what the German Weimar mark did, Reichsmark did gold terms. If you look, it went from 0 to 1,000,000,000,000 Reichsmarks. And while it did it, it was like it's all the way up. Volatility was inhumane. If you were borrowing money, so if you came to someone in 1920 and said, in the next 3 years, the German mark is going to 0, the German Reichsmark is going to 0, what should you do? And the answer is, I'm going to borrow as much as I can in Reichsmarks, and I'm going to buy real assets, etc., and away you go.
Yep.
Yeah, and I once thought that way, but there was this great chart by Dan Oliver at Mermicana that I've cited repeatedly, and God bless him, because it's a beautiful chart. It's a tremendous piece of information. The real answer is buy the harder currency, lever a little if you want, but be darn sure you can survive the inhumane volatility, because the reality is it's such a political change. The volatility is just extraordinary. So I think what we're watching is fiat currencies hyperinflating against Bitcoin. Now, is it possible I'm fitting this, what Bitcoin's doing to the narrative and ascribing a motive to the government that doesn't exist? 100% that's possible. Again, I am not privy to anything there. Yeah. But like I said, the longer this goes, like if a bald guy in Cleveland can figure out that this is what Saylor is doing, is effectively attacking the treasury market, there's guys in Washington, there's guys in the CIA that know this, and no one's doing anything. So there's something there the longer this goes with nothing being said. So that's something I'm watching with great interest. Like I said, if I was tasked with it, once China got to a certain size, once the US debt level got to a certain size, once the baby boom generation got to a certain age, the math is the math. There is no getting around the math. And so then it becomes, okay, what's the solution? China and Russia are like, we're gone. We'll borrow as many dollars as we can, and we're going to buy gold, and so we're left with this. How do we get out of this? To me, Bitcoin is a way out. It is.
Yeah. Yeah. And this is what is called Triffin's dilemma, right? The global reserve currency, where everyone's like, yeah, we'll take those dollars and we'll buy hard assets, because everything is denominated, all the debt's denominated in US dollars. So if the US dollar does hyperinflate against Bitcoin, and there's so much dollar denominated debt out there, what happens? I mean, is there some kind of debt jubilee, or does debt get redenominated in Bitcoin so that it can get repaid in that in some sense? I mean, there seems like there would be some unavoidable chaos, at least for a while.
Yeah, I think chaos is on the menu. I mean, I came into this year with my clients and I said, look, if you think that the chaos, if you're shorting chaos, because I actually literally said if you're shorting chaos because the calendar rolled over and because the occupant of the White House has changed, I got bad news. Yeah, there's going to be some chaos, I think. And I think it's going to get worse than it was in 2020, actually. I don't know how, but I think it's going to, because the tectonic forces we're talking about are so powerful and so diametrically opposed when you're talking about what the U.S. wants, what China wants. Within the U.S., what the sort of establishment dollar-centric banking system wants, and what the defense establishment wants in terms of its ability to maintain operational ability in terms of its supply chains to do what it needs to do per mandate. If the dollar continues to hyperinflate against Bitcoin, I don't think you'll ever see ever is a very strong term. I think we're a long way from contracts being redenominated in Bitcoin. Where I think you will start to get to is there will be a tipping point where people will begin to recognize what's happening and will begin to adjust pricing of assets accordingly. So right now, God love you. If you've owned Bitcoin for the last year, everything is stupid cheap. Housing is stupid cheap, etc. I would expect in places where there's a greater awareness of Bitcoin, etc. So out on the coasts, you may start to see people in their own minds at least go, look, all right, Bitcoin has done this. They may not list it for, hey, I want 2 Bitcoin for my house, but they may in their own minds be thinking that way. And so a house that you'll start to, the long-winded way of saying, the inflation will start showing up elsewhere, I think, over time. I don't think we're there yet.
Yeah. I know a lot of Bitcoiners who are starting have, or maybe even for a long time, thinking that way and using Bitcoin as their unit of account. I certainly do for the most part. I mean, I think I do the conversion, and I've gotten quite good at it, knowing the current price and doing the conversion between Bitcoin and dollars. And so double think, like, should we really go out to eat tonight, or should we just stay home and eat those leftovers, or eat that meal from last night, right? And it does start to sort of change your behavior, because there is so much potential upside to the money. And even when that volatility, that potential volatile upside, starts to subside, I think just having a deflationary money starts to change the way people think. So another question I often get is, if we have a deflationary money, how does that change the way we do business? Because, access to debt is going to be more expensive. And so it'll be harder to build a business. And I mean, I have my answer to it, but I would love to hear what you have to say when people say, deflationary money is bad, for whatever reasons. Maybe you can sort of reframe or frame that argument, and then give any response you might have to it.
Yeah, so I can see clear to just setting aside any realpolitik or political economy angle. I could see clear to the point where Bitcoin basically overtakes the dollar and people transact in sats or whatever the case might be. I could see how that would happen. That's what should happen if you look at, in a vacuum, stronger, harder currency versus not deflationary money. The challenge in that for me is the political realities of how that handcuffs the government in providing certain safety nets over time. The transition from where we are now to there, and what that really implies from a political standpoint. Because what you'd really be talking about is slashing defense, slashing entitlements dramatically in that world. Where I shake out for the foreseeable future is, and it's interesting, I'm seeing the comments here about Burry's recent quote about Bitcoin, about Triffin's dilemma, because this ties into it, which is the solution that Triffin's dilemma has been hiding in plain sight the whole time. And that is, Triffin's dilemma is using the same currency and the same issuer as both the currency and the primary reserve asset, right? So the problem was not so much the dollar. The problem is the treasury bond as primary reserve asset.
Right.
And so as you incur more debts to supply the dollars to the world because of that dollar reserve asset, eventually the treasury, there's concerns about the solvency of the treasury, concerns about the dollar, the whole system falls in on itself. That's Triffin's dilemma. The solution of Triffin's dilemma is simply separating the currency from the reserve asset. Make the reserve asset a neutral reserve asset, make it float in price, and let the market set that price. And so, look, you want to spend in dollars, government wants to supply dollars to entitlement programs, government wants to fight a war, great, go spend the dollars, print the money, have the dollars. But you can't do that in a system where gold is pegged to the dollar, which is why that broke down. You can't do that in a system where oil is pegged to the dollar, which is why that system broke down in part. You could do it in a system where gold is pegged to oil, because now, hey, if the military wants to invade the Middle East and gold goes to $150, gold goes up, and savers in gold terms, continue, the currency is reflected. Bitcoin does the same thing. And so when Burry said, that Bitcoin doesn't solve Triffin's dilemma, I actually quote retweeted it. I said, does it a high enough price? You make Bitcoin big enough, 100% it does. That's where I think this is going, at least for the foreseeable future, which is the problem with the system, the way you stop what China's doing to us in terms of using the system against us, is you separate the reserve asset, the primary reserve asset, from the primary global reserve currency. That's all you have to do.
And this is what we've done.
I don't care. What's that?
Yeah, I mean, this is what we've done in history too, right? I mean, we've had gold and it's floated against other currencies, and you could issue currencies and have a national currency and issue it, but it has a conversion rate to gold. Let's say like the florin was sort of the reserve currency in that era, the Renaissance era. There were other currencies floating around Europe at the time, but then they floated freely against the florin, and so that's where people would settle eventually, right? I mean, it's the same idea. It's a natural market phenomenon, and it has historical precedent. It's not something new or a new idea.
No, and the critical thing is you have to let the market set the rate for that neutral reserve asset, and you have to be willing to accept what the market's telling you, right? So if you have a floating neutral reserve asset, and the U.S. does a 1960s playbook, right, where we do Great Society and we do Vietnam, so we've got Johnson's Guns and Butter. The way that reflected in the system at the time was a run on gold, and because the price could not adjust, it resulted in supplies of gold being drained. Okay, well you can read the history books at the time. The head of the BIS, Jelle Zylstra, who was a Dutch central banker who flew here and was demanding his gold back from Paul Volcker, who was at Treasury at the time. When he was the head of the BIS, Zylstra went on to be the head of the BIS. He said they should have just let the dollar float. They should have just let gold float. If they would have revalued gold from 35 to about 150, that'd have been fine. We could have kept that system going. But they decided to close the gold window. A whole separate discussion. But you have to be willing as a government to accept what that message is, and that's a big part of the reason why gold derivatives have been allowed to expand as much as they have. Particularly the unallocated gold market in London, which is people say, why hasn't gold's price risen? Well, gold demand has risen. It's just the amount of paper derivatives, unallocated paper derivatives, have risen faster or as fast, and that's how they've helped manage the price of gold. Is if someone says, I want $100 million in gold, there's one of two things that can happen. If it's all physical and there's a limit on the amount of leverage that's allowed in that system, then the price of gold is going to go up, probably a lot, because right now to source $100 million in gold would probably take you a couple of months. And that's what I'm being told. Right. But if you wanted to own paper gold, you could call up London, hey, I want to own 100 million gold. Done. You don't own gold. You own $100 million of gold credit, but you don't own gold. And that doesn't matter till it matters. And that's a political question. And that's been, to Michael Saylor's credit, others in the Bitcoin community, that centralization of the gold is not a problem. It's something that Bitcoin does in a superior fashion, or manages it in a superior fashion relative to gold. And Bitcoin solves for that in a lot of different ways that you guys all know, so I'm not going to rehash here. But if you let that neutral reserve asset float in all currencies, then when the U.S. does a 1960s, the dollar collapses against Bitcoin, and other currencies that are managed more responsible don't collapse against Bitcoin. Then through the Bitcoin connection, the neutral reserve pivot, the dollar is going to collapse against those other currencies. And that may or may not be a good thing. Maybe it makes us more competitive. Hey, great. Maybe it makes us not able to afford anybody's imports and we start starving people. Not good, right? So it's a political question, but ultimately Triffin's dilemma is very simple to fix. It's just and for the first time in 70 years, it's actually in the U.S.'s interest to fix certain elements of the U.S. There are still dogmatic politicians and economics or economists that are against it, but I think reality is rapidly catching up to them.
Right. Yeah. So I think that's amazing way to look at the outlook here for Bitcoin, and as a way to sort of resettle the global economy, and as Bitcoin as a stabilizing force, essentially through repricing everything, right? In a floating global reserve asset, a neutral reserve asset. And if we have confidence in our economy, in our productivity, our ingenuity, and the businesses that are already built here and would be built here based on American ingenuity and entrepreneurship, then allowing that to happen and just kind of sitting back and let the process play out would be in America's interest. I mean, I think we'd see a flourishing of business in this country. I think other parts of the world that are starting to catch up too, but we still have that entrepreneurial spirit here. We still are kind of a beacon for the world's greatest minds, and that could be slowly drifting away if we don't maybe go this route and kind of accept Bitcoin as a neutral reserve asset. That's the way I'm kind of looking at it. So yeah, maybe it does make sense. It's in America's interest for a lot of us. We do see politicians becoming very vocal about Bitcoin, and one of them is on the Senate Banking Committee at this point. So that's very interesting.
That is very interesting indeed. I agree.
Yeah. This was fantastic conversation. I really appreciate your time. I see you have a couple of books sitting behind you, the Mr.X interviews. I was wondering if you could just give us a quick rundown on those books. I have not personally read them. I saw them sitting behind you, and so I looked them up, and they look really interesting. Do you mind giving us a rundown on what those books are? Yeah.
Absolutely. So, Mr.X interviews are 2 books. I'm currently working on the third. There's volumes 1 and 2. You can find them on Amazon. But the basis of the books are a interview conducted in the Socratic method with a fictional foreign sovereign creditor of the United States, and it talks through a number of the different issues around the faults in the money system and how the system is evolving on a real-time basis. And so the basis of the books were something. One of my best relationships on Wall Street reached out to me in early 2016 and said, you should write a report in a mock interview fashion with a fictional foreign sovereign creditor, and just answer. And it allows you to really explain a number of the different things you're talking about in a more conversational manner, and to hypothesize in a way that I couldn't in our research, because our research is very fact-based, fact, and here's a potential range of outcomes. So it allowed me to elucidate on some of the speculations or speculate more on why certain things might be happening. And so at any rate, one report turned into a series of reports with Mr.X. And so we've aggregated some of those reports and added some other stuff for the books. And so Mr.X, the first one starts in early 2016, and the second one, I think, starts in late 2017 and goes through early 2019. And so I'm due here to get going on volume 3. But like I said, they're available on Amazon. We've gotten great feedback from it, and that's the basis for those is the Socratic method interview with a fictional foreign sovereign creditor of the U.S.
I love that idea. It sounds like a really fun way to digest this material. So I will definitely be checking it out and looking forward to number 3. Number 3 has plenty to address 2020, 2021. So
Yeah,
there should be a lot of fire material there. Again, Luke, really appreciate your time. Everybody make sure that you follow Luke out on Twitter. Is obviously, as you've found out today, extremely knowledgeable on the macro front and knows about Bitcoin, and is often a guest on Preston Pish's show, which if you're not subscribed to the Investors Podcast yet, check that out. And just kind of right up there in the triumvirate of macro analysts that I consider, are very Bitcoin aware and have a lot to say about how Bitcoin fits into our global macro environment. And I say that would be Preston and Luke and Lynn Alden. So Preston and Lynn have been on the show several times, and I'm glad to finally get the third part of the triumvirate on the show. I appreciate your time, man.
Absolutely. Thank you very much for having me on. It was a fun talk.
Thanks, Luke. All right, everyone. Thank you for joining us today as well. It was another fantastic episode. Luke is great. I hope you all enjoyed it. Make sure that you subscribe to this channel. We strive to put some of the best Bitcoin content on YouTube out there for you all. So subscribe. We do this show every Tuesday. We usually have 2 guests. Mark Moss, our second guest, who was supposed to be with us today, didn't make it, but that's just fine. Had a fantastic conversation one-on-one with Luke today. So subscribe, like this video, make sure it spreads around YouTube and spreads this Bitcoin knowledge. We also have another show on Fridays called Swan Lounge. It's more of a hangout with Bitcoiners, kind of Friday afternoon. Let's talk about what happened in the week and just shoot it with some Bitcoiners. We are also on Clubhouse, helping out to run the Cafe Bitcoin Club with a lot of other Bitcoiners around the globe. So check out the Cafe Bitcoin Club on Clubhouse. It's a fast-growing audio-only social network. It's still iOS only at this point, but I hear rumors that it'll be out on Android relatively soon, which is great because we want to get as many Bitcoiners in there as possible. It's been a fantastic platform to educate new coiners. So check that out. We also have Bitcoin TV, on this very YouTube channel, 24/7 stream of some of the best Bitcoin content in the world for you, just one after the other. We also have a nice little price ticker and market cap ticker down there, so you can keep up on your price fix while you're learning about Bitcoin. And of course, go to swanbitcoin.com. Start paying yourself in Bitcoin if you're not yet. Talk to your family and friends about paying themselves in Bitcoin. You deserve it. It's a money that respects you and your time. So, and as we talked about today, it's playing an increasingly significant role in the global monetary stage. And it's important to have some Bitcoin and accumulate as much as you feel comfortable accumulating. We make that easy at swanbitcoin.com. You can go to swanbitcoin.com/Satoshi. Get 10 free bucks dropped in your account, and you can make your first purchase. You don't have to do anything really. Just sign up and give it a shot. We'll give you 10 bucks to make your first Bitcoin purchase and see what you think about the product. So a risk-free trial of sorts. So, make it happen. You can go to swanbitcoin.com/enlist as well for our referral program. It's called Swan Force, and we have 100 people a day or so joining the Swan Force. And I think it's a fantastic deal. You get 25% of Swan's fees on every purchase that your referrals make for 3 years. It's adding up to some meaningful sats for a lot of our Swan Force members, as Swan is really taking off and growing. A lot of those new members are coming in through the Swan Force, and so we're paying out a lot of referral fees and sats, those sweet sats. And I'm hearing from people that this is turning into meaningful money. And of course, if Bitcoin appreciates the way we think it will, then that those sats that you're earning through the Swan Force could be extremely meaningful to you 10, 15, 20 years from now. So join the Swan Force, start talking to your family and friends. The case is easier to make now that numbers going up, and there's so much educational material out there to pass along their way and get them just start stacking a little bit. Swan's an easy sell, $5 a week. That's all it takes. Just get your foot wet, dip your toe right in there, and just let number go up. Let Bitcoin do its thing like it's done with all of us, and teach people what money really is, and teach people why they need some Bitcoin in their lives or on their balance sheets if you're a corporation. And as I mentioned at the top, we have launched Swan Private. It is our white glove service for high net worth individuals, corporations, trusts, entities that are looking to accumulate meaningful positions of Bitcoin. So check out swanbitcoin.com/private. You'll get direct access to our Swan Private team that will help you accomplish whatever goals you have in mind, and some other perks as well. So you'll see those listed out at swanbitcoin.com/private. Super excited about what's going on at Swan. Things are just absolutely taking off, like Bitcoin itself. Really excited to be a part of the team and to be a part of this really exploding company. So hope that if you're not already, we can have you check us out and have you part of the Swan Squad and just join us on this ride. All right, that's it for this week.